All right, guys, good morning. Welcome to our of 2018. This is George Papazov Pro. Hang on. Hey, guys. It's George Papazov, TRADEPRO Academy. The mic was cutting in and out. I figured out why and I fixed it. All right, so in today's morning market update, we're going to talk about a few things. Google last night, Amazon, and what I think could happen to the market today and what the outlook is. I think we're going to have a really good opportunity in today's trading session, and I do think we're going to get a little bit of upside. I'll explain myself in a moment. All right, so last night, first and foremost, let's review some of the earnings. Google missed their revenue numbers. Google reported and Amazon reported. A lot of this stock market is led or driven higher by technology stocks. And if you go back since 2009 and you map technology versus financials and any other sector, technology is by far the strongest performer, and it's been pushing markets higher. It's the largest gain leader since the rally started. So it makes sense that everybody's following technology now. All eyes are on tech. Google and Amazon are like the titans of technology. That's kind of a cool name for a book or a movie. The Tech Titans. All right, anywho, Alphabet down 4%, also known as Google. They missed their revenue numbers. They reported Q3 of $13.06 versus $10.54 earnings per share. Anyone that looks at just earnings per share, they're like, wow, holy crud, there's so much earnings per share growth. Well, number one, they bought back some of their shares, boosting EPS artificially. Number two, the revenue number is what's more important. They made $27.1 billion versus $27.3 billion. And you're going to say, well, what's not to like about that? I'd be happy to make $27 billion a quarter, but you're not Google. And Google did $27 billion versus $27.3. They missed their revenue numbers. Here's where it got really sloppy for Google. This is what the market didn't like. Aggregate paid clicks went up 10% in volume year over year. Aggregate cost per click, this is called CPC. Marketers will love this number, down 7%. It's cheaper to serve Google ads in today's environment, but that's because the platform ecosystem is growing, the advertising ecosystem. You now do it on Facebook. Facebook ads are getting a lot of traction. I know a lot of business owners that love Facebook ads. I swear by them. All right, Facebook is getting some bigger ads. Instagram is now doing ads. That market's starting to get saturated and it's losing share. So it's good for the business. They're paying less to advertise. Bad for Google. They're getting less revenue on a cost per click basis. So they need more volume to offset it. That's what the market didn't like. Revenue miss, cost per click lower, CPCs not good. All right. Other than that, really good stuff overall in Google's report, but that was overlooked by those two things. Amazon down 7% on the back of weak holiday guidance. They're not expecting holiday sales to be blockbuster. That's the perfect thing to hear for somebody that's long the retail ETF like me. Great, thanks, Amazon. But they basically said they have a weaker holiday outlook. The CFO on the conference call backed that up and said, actually didn't back it up, supported on the other side and said, you know what, guys, we're going to have a great holiday season. He's a little bit more optimistic. On Amazon, same story. Q3, $5.75 a share versus $3.29 expected. Blowing out of the water the earnings per share, but their revenue fell short, $57 billion versus $57.1 billion. Look at that. On a quarterly basis, revenue is almost double what Google makes on Amazon. That's nuts. All right. Here's some more numbers for Amazon. It guides their Q4 revenue, so their next quarter expected revenue, which is the holiday quarter. That's how we know that they're expecting slower holiday sales. 66.5 to 72.5 billion versus 73.9 expected. So that forward guidance decrease for the holiday season indicates Amazon's expecting less consumption and weaker holiday outlook. That's why it's down 7.4%. I think this is a good news story. Like somebody revising their expectation lower, you don't know what's going to happen until it happens. So it's the market repricing something. The market's speculating about something that's speculative to begin with. It's the market doing what the market does. You don't know what this holiday season is going to be like. Nobody knows. The fact that the stock price took a beating 7.4%, that's very interesting because it's repricing an instrument based on complete speculation, which is all what trading is at the end of the day. However, we don't know what holiday spending is going to be like. And based on the other information I've been following, it looks like we've had a pretty good economic year, which could relate to some bonuses at the year end, right? Obviously, market's puking right now, so it doesn't feel that way. But if you think about it, most people today are better than they were at the start of the year from an economic standpoint, hopefully. You know, That might not be true. And if it's not, I'm sorry to hear that. All right. Chipotle is up 0.7%. Intel is up 1.2%. They've performed really well. Their quarter, actually, Intel rather had a really good quarter. Q3 1.4 versus $1.15 expected earnings per share. 19.2 billion revenue versus 18.1 expected. Guides their Q4 revenue 1.22 versus 1.10. Great guidance, great forward guys, great beat on numbers, strong numbers out of Intel. Snap down 10%, struggling to gain users. Who uses Snapchat anymore? My younger brother-in-law is actually here, and he's a perfect demographic for Snapchat. I'm going to ask him, Justin. Yeah, probably has. He's got good headphones too. Justin won't answer. I just want to know if he's on Snapchat or not. I'll follow up in the comment section. All right. Twitter up 15%. Now let's get into the juicy stuff. Markets here overnight. Asia, Japan's down 0.4. Hong Kong's down 1.1. China down 0.2. India down 1%. Red across the board. Asia markets to end the week. In Europe at midday, London's down 1.5. Paris is down 2.4. Frankfurt down 1.9. European equities just got murdered last night. Not murdered, but hit hard. You got 5 days like that, and you're officially in correction territory. Actually, yeah. You get 10 days like that, and you're officially in a bear market. It all takes 2 weeks. Remember this. Stocks take the stairs up and the elevator down. Never forget that. All right. Futures in the morning in the United States. Dow's down almost 1%. S&P's down 1.2. Nasdaq down 2.2. Crude oil's down. Huh? He does? But does he use it often? Justin, do you use it often? How often how many snaps would you say a day here, Justin? Okay, Justin's coming at you. This is important. We have the demographic right here, you know. It's talking about Snapchat earnings, and they said they have less users. So you use it, right? Oh, yeah, but I know people that send probably 2 or 3 snaps every minute. Well, here's a question, and this is going to answer a lot. Do you notice them using it more or less? Snapchat, yeah. Do you notice people using Snapchat more or less? More? All right, I was wrong. Yeah, the older people. Yeah, I feel like I'm too old for Snapchat. Wow, younger than you? Yeah. Wow. I get what you mean, how it's done, for the older generation. Yeah. It's kind of like Facebook. It's funny to see these trends because Facebook was leading the way and then it died off. As soon as my mom started liking my comments on Facebook, I was done. I'm like, it's over Facebook. Facebook's for older people, and you're just nah, I don't want to be. Yeah. That's the abyss. Well, that's fair. Thanks, Jay. That's good. We could get his insight on Snapchat. So his generation and the younger people than him even are using it more. So who knows? I think the question with Snapchat is how are they going to monetize? Ads might not be enough. It's been enough for Facebook, for Instagram, but we'll see how Snapchat does. We had GDP numbers at 8:30 in the morning. I didn't mean to talk with Snapchat for 10 minutes. 8:30 we had GDP. That came out at 3.5% versus 3.3 expected. Weaker than last quarter's 4.2, but still strong. And the Commerce Department said they're not able to estimate the overall impact of Hurricane Florence on the Q3 GDP, but they say there is an impact, so it's slightly weaker. It could have been stronger. 3.5 is a beat. So let's put this all together. I understand there's a lot of stuff I told you this morning. 10 a.m. of consumer sentiment. And 1 p.m. Baker Hughes. Let's put it all together. Let's slow things down and put this into context. Amazon and Google didn't really hit their revenue benchmarks. Their revenue in one quarter is more than most companies are worth. And so at a certain point, as you mature and expand, it becomes harder and harder to hit your growth numbers, especially on it grows $100 million. That sounds like a lot, but on a percentage and growth adjusted basis, maybe it's not. It's going to become harder and harder for them to hit their growth numbers to innovate. I think the market panic sold last night, and I'm going out on a limb here. I think they panic sold last night. I think this morning we wake up, and I think we push equities higher into today's close. I think we have a bullish day. It's the end of the week. It's been a bloody week, and the question is, will the bears be able to sustain this momentum? It's going to take more and more selling pressure just to drop less and less. I'm not going to tell you to keep buying all day, but in the morning, I'm going to start out with the prospect of buying dips and seeing if this rally has any kind of momentum. A good time to start looking at the longs is actually at 10:30. That's a common reversal hour. 9:30 to 10:30, I'll be cautious on a sell-off. And then afterwards, I'm going to try to look for some longs into the afternoon in the closing session. I think we shrugged this off. Today, you got to watch Amazon and Google very closely like a hawk. You got to be watching those charts. Excuse me, for correlation. We have it up on the FANG screen right up there. It's literally a quarter of my whole screen. We'll be keeping the room up to date. So watch technology stocks, watch Google, watch Amazon, and watch to see downside volume. If it starts to weaken up a little bit, you can expect to see a little rally for the end of the day and the end of the week, a little relief rally. What happens next Monday, I don't know, but I think we get a relief rally into the close this week, and then get some people long and excited into the weekend, and then bleed them out on Monday. That's typically what happens. So that's what I'm looking for. You guys have a great day. Thank you for tuning in. We'll call it a wrap for this morning market update. Hope you guys had a great week. Let's close it out strong. I appreciate you guys for being here. Have yourself an awesome weekend. Last but not least, don't forget to go to tradeproacademy.com/free training. One word, all one word. And what you can expect to find there is, I don't know if it's going to shock you or not, free training. There's a little bit of free training there. There's, yeah, I swear to God, there's 6 lessons that we put up there, and each one of those lessons is the first lesson of our premium courses. So you're going to get a real taste of what it's like. Imagine being able to go to like an expensive restaurant and ask to taste a little bit of everything and then leave. That's kind of what you get the opportunity to do. Just don't take your date on something like that. You're going to look cheap. Later, guys. Have a great weekend. I'll see you on Monday. Enjoy the free training. Enjoy your weekend. Be safe, be sound, be happy, and don't get in too little trouble. We'll pick it up again Monday. A lot of action in the markets. A lot of opportunity. Adios. No. Not allowed. Would you like to see a fireman up there? Okay. Okay. I'll fix it. All right, guys, let us get started. We're going to look at a few key levels for the S&P 500. I got some good levels for some trade analysis. Also on oil, I'm looking for some really good opportunities. I'm going to walk you through that now. I'm going to show you levels at which you get the best opportunity, the highest probability trades with the lowest adjusted risk. Let's start out with the S&P 500. Victoria will do NASDAQ, and then I'll wrap it up with oil. So let's get started.